Today, we have a conversation with a man who needs absolutely no introduction, and that is, of course, Pomp from Twitter, or Anthony Pompliano. We go through a lot of topics. Honestly, it was a great conversation. You do not want to miss this one. So if you're excited, do me a favor, smash that like button, and let's begin. Welcome to FUD TV, Anthony Pompliano. How you doing?
I'm doing well, man. How are you?
I'm very good. Thank you so much for coming back on the show. I know the audience is very excited to hear from you. Let's start just basic introductions for anyone who's living under a rock and might not know who you are. Can you introduce yourself?
Yeah, Anthony Pompliano. Most people probably know me as Pomp. Do a whole bunch of stuff in the space, everything from manage an investment fund to create a bunch of content, and just here to learn kind of alongside everybody else.
So what do you think in your background prepared you most for your current roles? Obviously, you wear a lot of hats. What background experience led you to this place? What do you think prepared you the best?
Yeah, I think just life, frankly. I'm a pretty regular dude. I was in the military for a while, built a couple of companies, had the opportunity to go out and work at some larger corporate technology companies in Silicon Valley, and now live in New York City. Got four brothers, and kind of just go through life like a normal person. And I think that my perspective on how does this impact the world that we all live in, people kind of just gravitate towards hearing that perspective, and so happy to provide it.
Yeah, I think that's really, you hit the nail on the head. It's relatable, right? And you come from a military background. When did you realize, hey, this tech stuff is really what thrills me? This tech stuff is what I want to be a part of.
Yeah, I don't think that it's kind of a binary, hey, did I want to do the military or did I want to do something else? I think it was, there's very specific things that the military could bring in terms of value, everything from leadership skills to discipline, et cetera. And once I felt like I'd gotten those or majority of what I was going to get out of the military, I decided to move on and go do other things. But again, it wasn't like when I was in the military, I wasn't reading or looking at information and things like that. But vice versa also, once I got out of the military, it's not like my interest in geopolitics or physical fitness or leadership or any of that stuff went away either. So I think it's kind of been a simultaneous interest both on the technology and business side, but also things that the military provides.
Awesome. Yeah, no, I couldn't agree more. Some of the most important thought leaders in the business world have come from the military background. Vast majority of Fortune 500 CEOs come from a military background. So definitely see the parallels there. And I think that it's very important, going back to your point about living a normal life, right? I think a lot of people have a difficult time connecting with the techies. They feel like there's a block there, like they can't get past it. How do you feel like your sort of perception of yourself as just a normal guy, yet you live in a high-tech world? How has that allowed you to be different?
Yeah, well, I think there's two components, right? So on the technical kind of expertise side, I don't code, I'm not an accountant, I'm not a lawyer, right? Kind of all of the highly technical occupations that I think people are naturally drawn to crypto. I don't have any of those skills, right? I understand enough of kind of software development. I was a product manager at Facebook, et cetera. So kind of can get by in conversation, but by no means am I an expert. And same when it comes to accounting or tax or law or whatever it is. And so I think that, that kind of normal perspective allows me to have an understanding of different disciplines, but not be kind of an expert in any of them, kind of a jack of all trades, if you will, which I think most people generally are, right? If you're curious, you tend to have an understanding of very different disciplines, but it's kind of a surface level understanding. And so being kind of self-aware of that is important. Second to that, though, I think also is a lot of the investment decisions I make, a lot of kind of the assessments that I make, both in the content creation and on the investing side, it's driven by people, right? I want to spend time with the people that I find enjoyable, people that I believe in. And so you don't necessarily have to have a technical skill in order to be able to do that. I think that, I generally over the years have developed a pretty good ability to kind of sift through people and pick people. And so, thankfully I'm able to double down on that skill set and kind of use that on a daily basis.
Yeah, I love that. I think people miss the focus on other humans. When you get into this whole techie world, you miss the real point here, which is each other. I think that's a great point. And I think that brings me to my next question, which is Twitter, right? You figured out Twitter. And Twitter really is, again, about other people, right? It's just characters and humans. And so can you demystify Twitter? What's the secret of Twitter?
Yeah, I don't know if there's any secrets. Look, I had a pretty significant advantage in just I've worked at social media companies, and I generally understand the frameworks and decision processes that they go through when creating these algorithms, right? So everything from kind of the time decay of content to how they boost certain types of content, when they boost it, the idea that users are signing in at different times based on time zones, all these different kind of facets that I was able to sort over the years. But I'd always helped other people grow their audiences. And so I, in 2017, decided that I was going to help myself do it for me. And so really what ends up happening is comes down to a couple of key kind of tenets. The first is you got to create a lot of content. Two, that content's got to be interesting to people. And three is that those people have to find it identifiable or so interesting that they share that content. And if you can kind of repeat that process over and over again, hours after hours each day for a long period of time, you tend to accumulate a large audience. And so I think that applies not only to Twitter, which is more kind of text based, but that also applies to things like TikTok, Instagram, Facebook, whatever the latest social network is or kind of media platform. And so it really just comes down to lots of content that's interesting and shareable. And if you can do that, then over time, you'll accumulate that large audience.
So what kind of content creators are you following?
Yeah, I'm actually pretty obsessed with kind of content creation as a general discipline, right? So everything from if you look at like a family like the D'Amelios on TikTok, super interesting to me how two teenage girls kind of go viral. They start to build a large audience. They pull their mom and their dad into the videos. Next thing you know, the dad's got 1 million followers, right? Like the way that that works is really interesting. It reminds me a lot of how like the Vine stars grew. They all moved into the same apartment complex and they would bring each other into their videos, and those kind of collaborations really grew audiences. If you also look at things like these hype houses or content houses, right? You're seeing that kind of informally with like TikTok stars or Vine stars, but now you're also seeing businesses do this. Something like 100 Thieves building out this huge compound in LA, where it's like 15, 20,000 square feet, and they have everyone there all the time creating content. But then that also kind of translates into like the Barstool Sports of the world, right? Where they kind of created this fantasy factory type, mechanism. They have a ton of people all in one location. They're filming everything all the time. And then they're able to monetize that, not just through kind of traditional advertising, but also through merchandise sales, live events. They own a sports league in the boxing that they do. And so I think it's super interesting. And then the last facet around content creation is kind of the subscription model. So if you think of something like The Athletic, for example, they're able to build what looks kind of like a future of sports coverage, right? Kind of like the ESPN of the future. But they do that by having people pay $10 a month or $60 a year to get the absolute best content. And so it goes back to whether you're an individual or a business, if you can create really engaging, high quality content and you do a lot of it over a long period of time, you'll accumulate either a large audience or very high levels of revenue. And I think that all that stuff is very interesting to me.
Yeah, I mean, you're echoing, some things that I hear in other folks, such as Gary Vee. I'm sure you're aware of him, and I feel like you're almost like I don't want to compare you directly as a crypto Gary Vee, but I sometimes feel similar energies. And I mean, what's clear to me is that you understand very scientifically what you're doing in a repeatable way. And I think that you're seeing that because other people have adopted the flavor of Pomp tweets. And that's a good thing for all of crypto Twitter, right? Because the information is being translated. And that's what I think something that you do very well is by having your feet firmly rooted in this normal guy world and not trying to identify as the deepest layer one tech guy or whatever, it allows you to project the message in a way that it can be heard. How often do you sort of take a step back from your content and say, is this relatable enough? Is this simple enough? Is this hit hard enough?
Yeah, so I'm probably pretty scientific in understanding, the type of content, how to produce it. Take Twitter, for example. I think I was one of the first people to really understand the move from 140 characters to 280 characters allowed for a lot more spacing. So rather than kind of cramp everything down into a single 140 character tweet, all of a sudden you could actually tweet less than 140 characters. But if you almost use like paragraphs or lists, it just made it much more digestible information. And so, doing that, plenty of people started to repeat that. But I think that's a net positive, because just as much as people see what I'm doing and they start to reuse it, I've learned way, way more from looking at what other people are doing. Right. And so you'll kind of see these waves where somebody figures out something that works and other content creators immediately start to replicate it. And to your point that, again, it just increases the likelihood that there's the communication of ideas and information. So I think that's really positive. And then the other thing that I would say too is for me, in terms of the actual content itself. So I think of it as like the content format. I'm pretty scientific about, but in terms of the content, I pretty much just stick to like what I'm personally interested in, right? Like one of my core theses around content creation is just people are more likely to quote unquote subscribe, whether that's follow, pay, etc. individuals rather than organizations. And over time, I think that's only going to get more and more popular and more obvious. And so for me, it's like I'm just authentically who I am. When you see me joking around, it's because I want to joke around. If you see me upset about something, it's because I'm actually upset. And so if I kind of follow my personal interests, I think that people generally that like that, they're going to gravitate towards it. And it has the opposite effect too. Like there's plenty of people who don't like it and it pushes them away. But over time, like the people who are gravitated towards it, that's a much larger number than the people it pushes away. So that authenticity, I think, is really, really important in today's day and age on the internet.
Yeah, I couldn't agree more. I mean, it's, seeing what you do and now hearing you decode what you do, the self-awareness is really critical there, and it's very clear. And I think it serves a huge purpose in helping you achieve your goals. Speaking of which, you're expanding your content focus, as I've just heard. Tell me a little bit about your new content venture on YouTube.
Yeah. So 2017, I spent a bunch of time trying to figure out Twitter. Did that pretty well. Then launched the newsletter that I write every morning. That grew nicely. Then in the end of 2018, launched a podcast that's grown quite large. And my focus for 2020 is to grow a YouTube channel. And so right now we've just been posting the videos of the actual interviews on the podcast, but seeing some nice growth there. And then over time, we'll start to add more and more content types there. They're all obviously video based, but the YouTube audience I think is really interesting. It's very different than what you find on Twitter or other platforms that I have. And so if I can build that out this year, the goal is to go from about 10,000 subscribers to 100,000. Throughout this year, and so far so good. So everyone go over there and subscribe and help us out, frankly.
Yeah, well, we'll link you guys if you guys are looking to follow Pomp on YouTube. The link is in the description of this video, so definitely check that out. What do you guys think as you sit in this chair? You're a great content creator. You must have a lot of people in the space reaching out to you under the guise of a content creator. You must have a lot of people reaching out to you in your seat over at Morgan Creek, where you're doing investments. What do you think is the best product in crypto today?
Bitcoin, not even close. Look, it's a thing where I saw somebody tweeting recently. They said, like, aren't you guys bored with Bitcoin? And that's part of like the beauty of it is, yes, people should be bored with it. It's pretty well understood at this point. Here's exactly how it's designed. Here's exactly how kind of the rise or adoption of Bitcoin is going to happen. And now we need to be super patient. And that patience over a long period of time, I think, will pay off in spades in terms of seeing that adoption occur. But again, that means that every single day we don't have something to yell and scream about. The outrage culture kind of, isn't satisfied, if you will. So I think one that leads to a lot of teams saying, well, this is boring. I want to like go and do something else. And so we see a lot of kind of, wild stabs at new things, et cetera, which, frankly, experimentation and innovation is positive. But then also to investors, right? You see investors trading out of assets. You see them kind of, they almost like they feel like they're not doing something, and so they confuse motion with progress. But I think ultimately for me, like when you think of products in the space, the most important asset or product is Bitcoin, and we're continuing to see it get stronger. We're continuing to see adoption. And most importantly, from an investment standpoint, we're continuing to see it be non-correlated to traditional assets. And as that kind of furthers, every day that we continue to stay non-correlated is another day that Bitcoin becomes much more attractive to kind of traditional investors. And so I think that's a really, really important trend that probably doesn't get talked about enough, but something that I watch pretty closely.
Well, someone should tweet about that, right?
Yeah, I do my best, but I'm sure there's other people who should be doing it as well.
So if there is a killer dApp, is it Bitcoin?
Yeah, to me, like that's the one that I think obviously as of right now has the highest probability of working. Definitely has the most adoption. Definitely has the biggest mind share. And so kind of it's the winner so far. There will be others for sure, not necessarily currencies, but I think other products in the space usually built around this. So if you look at something like a BlockFi, right, everyone knows that we're pretty big investors there, very bullish on that product. And what they're essentially doing is they're building out like wealth management products or kind of banking type products. So you can put in a digital currency, you can take a US dollar loan against it. You can put in a digital currency as a deposit, they'll pay you interest. Eventually, they'll have a credit card that they'll pay you Bitcoin rewards on. So all of these things are kind of infrastructure that are related and supporting the adoption of something like Bitcoin, which I think is important. And so is that technically a dApp? No. Is it going to be kind of a killer application around this ecosystem? Absolutely. And so I think that people kind of have to expand their definition of, dApp versus something else, because ultimately it's just what products and companies end up being successful. Whether they're decentralized or not is on a case-by-case basis, but actually serving the needs of a customer, kind of building things that people want is the ultimate goal here. And so Bitcoin, I think, has done that. There's a number of others that are doing it now, and there will be plenty more in the future. Our job as investors is to go find those early. So that's what we spend most of our day doing.
Yeah, I find that very interesting. Obviously, we think of Bitcoin, we think of things like you overlook all of the products that have enabled us to easily use Bitcoin, right? I go on Coinbase, they have a simple UI, simple, login funnel that's been refined over years with a great product team. Things like that we tend to almost, it seems like it's just part of the environment. So we ignore how important they are. How important is new products to achieving that next level of adoption? And are we there yet? Is it just a waiting game where the world needs to catch up now, or do we still need some great products to come along?
Yeah. So, we've got a bunch of great products today, but we definitely need more of them. And more of them can be the existing products being innovated and kind of pushed forward and continue to evolve. But also, we need more teams working on this stuff, right? I don't think we ever have enough kind of ambitious, entrepreneurial, innovation driven teams working on making sure that this stuff is successful. Another thing that I'll call out, we're very small investors currently in a company called Zap. And these guys have built something, a new product called Strike. With Strike, what is really interesting to me is they're empowering users. So I can send you, let's say, $20. I literally type in $20. You receive $20. Neither one of us has to have any understanding of Bitcoin, Lightning Network, blockchain, anything. It just kind of feels like a Venmo, a Cash App, et cetera, to you and I. What's happening underneath the hood, though, is actually they're sending money on the Lightning Network. So they can send money cheaper and faster anywhere around the world than Visa, Venmo, Cash App, MasterCard, et cetera. So anytime that you can drastically reduce the friction for speed and cost in financial transactions, there's going to be value created. These guys are doing it in a very, very interesting way using the Lightning Network. I think that's a perfect example of a team that looks and says, hey, what is all of the tools or infrastructure available to me, and how do I actually leverage this to solve a real world problem, right? Then if you kind of go to other products, either ones we're invested in or not, I think you see that same mentality or that same mechanism over and over again, where people are trying to build products and services that solve real problems, right? And I just keep hammering on our founders and founders that we don't invest in, saying, look, at the end of the day, if you build something that people want, you will be able to build a business around that, right? And I think that that's a mantra that we need to keep instilling in lots of people throughout the crypto and Bitcoin ecosystem. Is just that this isn't supposed to be like a science experiment, right? This isn't supposed to just be, hey, let me show my friend this shiny thing I built. Instead, we really need to solve problems. We really need to build things that people want. And if we can do that, we're gonna make a lot of progress really, really fast.
Yeah, it's almost it's a mentality that for some reason hasn't quite infected the crypto sphere like it has the Silicon Valley world. Because in Silicon Valley, you don't get $100 million for writing an essay. In crypto, we had an era of people putting out literal documents and raising 9-10 figure sums, or 10-figure sums in some cases, and it's just absolutely mind-boggling. Was the ICO rush, was the ICO mania a net negative for the space?
Yeah, so a couple of things here. First, my perspective, I'm highly biased. Throughout 17 and 18, we were very, very kind of loud about being anti-ICOs. And not so much from the entrepreneur seat, but from the investor seat. Again, everyone has their own incentive model. So if you're an entrepreneur and you get told, hey, you can set up a website from anywhere in the world and you can take capital in from investors very quickly in large sums, and it will help you build your business. Of course, entrepreneurs are going to be interested in doing that, right? And so, especially when that capital is non-dilutive. So the incentive model for entrepreneurs was to do this, and there's no problem with them doing it. Now, where the questions come into is one, were they doing it for the right reasons, right? So there's some kind of ethical situations where people were being unethical or doing it knowing what they were doing was not actually going to work. That's a whole different case. But on a pure mechanism standpoint, getting non-dilutive, cheap capital very quickly is what every entrepreneur tries to do. Now, from the investor seat, I think that's two main kind of trends that were at play here. The first was a lot of investors were investing thinking that they were owning equity, even though all the legal documents said they weren't, et cetera. They generally thought they owned equity, right? You see this with something like XRP versus Ripple. When Ripple ends up being successful, a lot of people holding XRP kind of celebrate. There is a connection between the two, but holding XRP does not necessarily mean you benefit from the financial performance of the for-profit software company of Ripple, right? You kind of see that model over and over again. Then the second thing was that they were basically suffocating companies with capital, right? One of the things that we think a lot about as investors is companies can, when it comes to capital, can die for two reasons. One, you can starve the company, meaning that they don't actually have access to enough capital. They run out of money, but you can also suffocate or you can drown the money in capital. And so, in the private markets, we saw this with SoftBank coming in and just writing these massive checks to companies, and companies kind of looking around and be like, well, what do we do with $100 million, right? And there's a joke that I always tell founders that has a pretty big part of truth in it, which I say, look, no matter how much capital you raise, you're going to spend it in 18 months, right? It doesn't matter if you raise $100 million, $1 million, or $1 billion, you're going to spend it in 18 months. And while, it's directionally correct, it's just that if the money's there, you're going to spend it. And so I think that's what we saw a lot in kind of the ICO boom was people raised a lot of money and then they spent it. Now, I actually don't think it was a net negative. And the reason being that whenever you get price movements, whenever you get large capital inflows, et cetera, naturally humans will pay attention, right? There's big numbers being drawn around. There's a lot of volatility, et cetera. And so the ICO boom, along with Bitcoin's price increase, et cetera, did is it pulled a lot of people in, right? Go and if you look and say, how many people had never looked at this stuff pre-2017? Well, it's actually a big percentage of the people who are here today, right? And so these bull markets are really important in terms of bringing in new individuals, whether they're engineers, they're entrepreneurs, they're investors, whatever it is. And so I think over time, as we go through these bull and bear markets, we'll continue to see this kind of play out where the bull markets pull a bunch of people in, the bear markets kind of cleanse out a good portion of those new people, but then there's a net gain over that cycle where there's more people at the bottom of the next cycle than there were in the previous kind of bull and bear cycle. And so I think that's important for us as we continue moving forward in front of the adoption in the world is we need price volatility. We need big numbers of capital inflows, et cetera. And so I probably am in the camp of ICO boom was not necessarily a net negative, but it definitely had some really bad parts and some people got hurt there and entrepreneurs did some bad things. But generally, I think that we're kind of past that, hopefully, and we'll keep going.
Yeah, a lot of great points there. One of the great points that I think you made is 18 months, right? How many ICOs are people still holding their breath for? And it's been a lot longer than 18 months. And I think that I don't want to let anyone down here, but just always try to root yourself in the most realistic vision of the now and the future. And if your ICO token raised $100 million and it's been 2 years and you've seen no product, understand that they're now past the time scale that most companies would have spent that capital. So I think that's a great point. And of course, yes, we need those shiny objects. We need the shiny objects to attract new eyes, new ears, and overall the space grows, whether or not those individual projects flourish. So great points there to really take home and meditate on, people, if you want to listen to those. Now, I want to shift a little bit to just general investing strategy in 2020. There's a lot of conflicting opinions right now. Mainstream markets, are they overheated? Crypto market, is it really on the verge of this new everlasting bull run? The everlasting green candle, is it coming? What is your view of 2020? How are you making moves?
Yeah. So again, I'm a pretty normal dude. I don't have any special insight that other people don't have. When it comes to traditional markets, it's pretty simple. If you look historically at the multiples that are currently, let's say, public equities, we're at very high multiple levels. And so over time, mathematically, there's going to be an increased probability that we return to the average, right? And I can't predict, is that tomorrow? Is that 6 months from now? Is that 10 years from now? I don't know. But we don't go up and to the right forever. And what I mean by that is in between kind of a continued increase in price of, let's say, public equities, you're going to go back down to those levels of kind of more average multiples that you see in stock prices. And so I think that's coming at some point. We'll see. The other thing is a lot of things that don't get spoken about are really big issues, right? So like, let's say the repo markets, let's say corporate debt levels, there's a very strong case to be made that once there's kind of some air taken out of the balloon, if you will, all of a sudden there's all these dominoes that fall together, right? One of the things that I recently wrote about a little bit and think is pretty interesting is the idea of the coronavirus being a catalyst for kind of this, return to normal levels of economic production. And what I mean by that is if you look at stocks, they've kind of been inflated by quantitative easing and central bank activity over time. If all of a sudden the coronavirus puts many manufacturing plants out of business for a while. Employees can't just show up to factories, right? Apple's already kind of say, look, our earnings are going to miss. There's a Samsung plant this weekend that got shut down, right? You just kind of see it over and over and over again. All of a sudden, all of those companies that are loaded with corporate debt, they can't pay off the debt. Well, that even now means that either a government or a bank's got to step in and kind of salvage the situation before it gets really, really bad. And so there's the possibility, right? Not the guarantee, but the possibility of that being an issue. When it comes to crypto markets, I think this is, a world that we're living in right now where, Bitcoin's kind of doing what it's supposed to do. It's being non-correlated. It's kind of continuing to slowly increase in price over time as demand increases. And I don't think that we're going to see like this everlasting bull market with Bitcoin where it just goes, explodes to $1 million a coin and stays there forever. I think we're going to get a lot of what we've got over the last 11 years. So we'll see bull and bear cycles. You'll kind of go up, hundreds of percent. You'll see everything from 30 to 80% drawbacks. And that'll happen over a number of years. And eventually I do believe that Bitcoin will be the next global reserve currency, but I don't think that's something that occurs in, 2 years, 5 years, or even 10 years. I think it's going to take a while. And so it's something that I think people really got to ask themselves, hey, am I here for the right reasons? Am I actually have a low time preference? And do I have some patience? And if you do, then we'll see what happens.
Yeah, I think that's a apt analysis. Do you hold any alts? I've never heard you really talk very much about altcoins. Do you hold any? And if you don't hold any, do you admire any founders and any leaders in the altcoin space?
Yeah, so I only hold Bitcoin, and I've been pretty, public about why that is. And really, it just comes down to if you draw me a Venn diagram of something that has great underpricing today, meaning that it's worth more than the current price. And then on the other side of the diagram, you have something that has a high probability of continuing to succeed. When you put those together, I think Bitcoin is kind of the one asset that fits that really, really well. And so that's kind of what I hold. In terms of founders that I admire, first and foremost, anybody who starts a company, a project, any of this stuff, you have to admire for having the courage to do it, right? It's really hard, and it's much easier, right? Mentally, it's much easier just stay in your job, right? Just take your salary and kind of go home at night and do whatever you want to do, and not kind of take that leap of faith or betting on yourself. So just at a pure, base level, any founder I immediately admire. Now, when it comes to ones that I think are doing really interesting things, obviously our entire portfolio of companies we're really excited about, Figure Technologies, BlockFi, et cetera. But then on top of that, I think that there's a whole basket of entrepreneurs that maybe are doing things that we don't necessarily want to invest in, or it doesn't fit our mandate, but they're building things that have the potential to be valuable. And if you kind of look at other investors' portfolios, I think that you can kind of triangulate. Hey, if there's a lot of really smart investors all investing in something, it usually ends up being because the founder's super compelling. Now, whether they're successful is a whole other kind of situation. But I do think that if you use Signal, a lot of times you can quickly find out, who do all of these people who have a lot of experience investing think is compelling? Well, go find the founders that a bunch of them invested in, and usually that's a pretty good place to start.
Well, I think that's an amazing guide to be using. On that note, Musk or Bezos?
Yeah, listen, I'm actually of the belief that they're both dominant in two very different ways, right? If you look at Bezos, I think that he's very, very set on kind of this relentless pursuit of dominance. And he's done a fantastic job doing that. If you go back and you listen to a lot of the early interviews, it's crazy how prescient he was in terms of what he was going to build. And then his ability to take what was this wedge into a market and expand it into Amazon as we know it today, I think is incredible. But then if you go and you look at somebody like a Musk, the two things I admire about him is one, he's obviously a first principles thinker, right? His ability to realize, hey, why don't we go to space more often? Well, the rockets are expensive. Well, how do we get their price down? Oh, I don't know. Like, we got to be able to reuse them. How do you build reusable rockets, right? And kind of being able to go back to those first principles, I think, is really, really important. He's shown that he can do that in many different industries. And then second is, regardless of what people believe, like, the guy's got incredibly tough skin. I mean, at one point he was the most shorted stock on Wall Street with Tesla. He's constantly people who are yelling and screaming at him, et cetera. And so, again, it's hard to be a founder. It's hard to start a company, and then to do it with basically everyone, or a lot of people in the world talking shit to you to some degree, makes it even more difficult. And so I think somebody like that is super admirable. Just see him, kind of the persistence he has to see the world kind of evolve the way that he wants or believes that it needs to.
Yeah, I think you're right. There's sort of Bezos is trying to bring the world to the customer, and Elon Musk is trying to bring the customer to his sort of vision of the world. They're very, very different visions, and I think you summed it up pretty well. So what's the most interesting article you read this week? Any topic is
So the most interesting one is probably, I think I tweeted out it too, is about a bank robbery in Buenos Aires. Basically, these guys, a bunch of friends, figured out that if they went in to rob a bank and never left the bank, they could do some pretty interesting things. And so they looked at it more as art than a crime. And it was like the beauty of their plan. Could they actually execute it? And essentially what they did is they took over the bank. They held the police at bay by releasing hostages periodically. And while they were doing that, they went through a bunch of safety deposit boxes. They took about $20 million or $60 million, I think. And then they cut a hole in the floor that led to a tunnel system underneath. They then were able to basically navigate that tunnel system and then get to a getaway car and get away. And by the time the police stormed the actual location, not only were they gone, but they were watching on television from home. Right. And so it's kind of, again, I don't condone any of the criminal activity, but it's pretty interesting to see they eventually got caught and then they talk about it and their belief that it was this art that they put out into the world. Is probably not the way that I would describe it, but it definitely was a very kind of riveting read and learned some stuff from it.
I'll definitely look out for that. Thank you so much for sharing your perspective. It's been an amazing and informative interview, and we hope to have you back on FUD TV soon.
Absolutely. No, I love what you guys are doing. So thanks so much for having me on, and we'll definitely do it in the future.
Yeah, thanks, man. Well, I hope you guys enjoyed that. I know I certainly did. Another big thank you to Anthony Pompliano for coming on the show. Go subscribe to Pomp's YouTube. Link is in the description. Of course, if you're not subscribed to this channel, do me a favor, hit that sub button. You don't want to miss an episode. As usual, you're watching FUD TV. My name is Elio Trades, and I will see you very soon on the next episode.